Happy New Year, guys. I hope you've all had an enjoyable break and have taken the time to reflect on what was a pretty crazy year. As we move into 2023, many of you will be setting goals for the year ahead and wanting to make a positive start to the year. Over the next week, I'll be sharing some of my favourite books to add to your summer reading lists. With the S&P 500 down about 20% from where it was 1 year ago, there is no better time than the present to brush up on your investing knowledge to capitalise on the bear market. There is a great saying in investing that goes, the stock market is the only store where when things go on sale, everyone runs for the door. The books I'll be sharing will shed light on just how common a bear market is and will offer tips and strategies using tried and true methods to navigate towards building a stronger portfolio. Whether you are just starting out or an experienced investor, there's always more to learn when it comes to investing. Before we start, if you haven't already, please make sure to subscribe to my channel down below to see more content just like this in the personal finance and investing space. The first book to add to your reading list is recommended by nearly every big-time investor, and it's called The Intelligent Investor, written by Benjamin Graham. Titled the father of value investing, Graham was a teacher and mentor for some of the most successful investors in history, including Warren Buffett. The book was published in 1949, quite some time ago, but its contents are still very relevant for investing today. Buffett has even labelled it as being by far the best book on investing ever written. He went on to later claim that chapters 8 and 20 have been the bedrock of my investing activities for more than 60 years. I suggest that all investors read those chapters and reread them every time the market has been especially strong or weak. The book is by no means an easy read, but it certainly has a lot of good quality information that almost anyone can learn from. Of the many lessons taught in the book, Graham's key message was to acknowledge the irrationality of the stock market, or miss the market as he calls it. Put simply, the prices of stocks swing up and down every second during a trading day. But is this volatility in stock prices in any way influenced by the underlying value or earnings of these companies? The answer is probably no. Graham stresses in the book about how investors should only aim to profit from the herd mentality, but to never participate in it. There are three main lessons I took away from reading The Intelligent Investor. Firstly, you should always take a value approach to investing, and always buy stocks at a discount to its perceived true value. As Graham's student, Warren Buffett is no different, of course, and has spent much of his career seeking good quality companies at a discount to what he considers the true value. The second lesson was to have a contrarian view of the market, which ties into the first point. Graham's lesson is that a stock becomes riskier as its price increases, as there is an inverse relationship between the price you pay and the return you earn, as well as having a greater risk of overpaying. We can certainly relate to this in recent years with the rise and fall in the price of many large tech company stocks, such as Facebook and Amazon. Of course, as the saying goes, be fearful when others are greedy, and be greedy when others are fearful. The third is to truly understand the business you're investing in, as the traded stock is simply a slice of the underlying company and its earnings. When an investor assesses a company's true or intrinsic value, it is imperative that they don't get swayed by market emotion. The second book is called The Little Book of Common Sense Investing, written by the former CEO of the Vanguard Group and is the father of index funds, John Bogle. This book is a guide to investing in the stock market and advocates for a simple, low-cost approach to building wealth through long-term investing. In the book, Bogle discusses the importance of diversification and the dangers of trying to beat the market through active trading. He argues that the best way for individual investors to achieve long-term success is to build a diversified portfolio of low-cost index funds and to hold on to these investments for the long term. It's no real surprise given that he was the head of Vanguard and one of their biggest businesses is index funds, of course. I really like this book as it is really easy to read and its lessons are very relatable. Through investing platforms here in New Zealand such as Invest Now, SmartShares and Kernel, or even Sharesies for some of the ETFs, investing in index funds has never been easier, and they've been a huge innovation in the investing world. A quote from the book is, "Don't look for the needle in the haystack, just buy the haystack." For busy investors who don't want to do the kinds of analysis that Benjamin Graham was advocating for in the first book, this book may be a better fit. After all, Warren Buffett too is a strong advocate of low-cost index funds, such as the S&P 500, for the average investor.
In my view, for most people, the best thing to do is to own the S&P 500.
There are 5 key lessons I got from the little book of common sense investing. First, the importance of low-cost index funds. Bogle emphasizes that investors should build a diversified portfolio using low-cost index funds instead of trying to beat the market by choosing individual stocks. Second, the dangers of day trading. Bogle argues that the most active investors are usually unable to outperform the market over the longer term, and the brokerage costs to do so usually erode returns. Third, diversification is important and allows investors to reduce risk. Fourth, investors should invest over the long term. And lastly, just like Graham promoted, investors should not be swept up by market hysteria and should always stay true to their investment principles. The third book is One Up on Wall Street, written by Peter Lynch. Lynch is well known in investing circles for running one of the most successful funds in the world, doubling the S&P 500 returns from 1977 to 1990. During this time, his fund grew by an average annual return of just under 30%, which is pretty remarkable. The book provides practical advice for individual investors and aims to teach readers how to pick winning stocks, the opposite of what our second book covered. Similar to our first book, written by Benjamin Graham, Lynch promotes many similar themes, including the buying of undervalued companies, truly understanding the underlying businesses, and patiently waiting for opportunities in the market to present themselves. Key lessons from this book are to firstly, do your own research and not rely on the advice of others when it comes to investing. Secondly, Lynch advises investors to put their money into businesses and industries that they know well. He believes that this approach can give investors an edge over the professional analysts who may not have the same intimate understanding. For example, if you work in the education sector, you're likely to have a better understanding of the underlying businesses and markets and the drivers of their future success. Thirdly, investors should not try to time the market or get caught up in short-term trends. Instead, he advocates for investors to take a long-term approach and patiently wait for investments to grow. So that rounds out my top 3 investment books to add to your reading list in 2023. Honourable mention must also go out to Girls That Invest, which is written by fellow Kiwi Simran, who runs a successful Instagram community with over 170,000 followers. She breaks down some of the dry investing concepts into relatable, bite-sized pieces of wisdom to make investing more accessible for everyone. If any of the books I've covered in this video look interesting, please make sure to check out their purchase links down below in the video description. If there are any other books that have been instrumental in your investing journey, please let me know down below in the comments. And if you haven't done so already, please make sure to subscribe to my channel down below to see all my future content in the personal finance and investing space. Thanks for watching and stay tuned for my next video on my favorite personal finance books. Cheers.